All right, Happy New Year. This is the first video of 2023 for SD stock trading. What's going on in the market? We had a very interesting December. Volume was low. Everybody streamed about the Santa Claus rally. It did not happen, you can say, but it did not fall apart. At least in the last 2 days of the year, 31st, it started to rally, but then it kind of retracted and closed flat. Then the first 2 days on January 3rd, it was a down day, but today it was an up day. So it's actually been hovering between this 3800 level to 3900. Whenever it is going to 3900 or close, the market is panicking, panic sell starting. And whenever it's going below 3800, around 3770, 3780, the market is rallying back. And this has been the gravity of the market has been around 3825, 3827 level. So if you sell a call every day around 3827, 3825 level, not 37, so 3825, 3835, that's where the market is kind of pulled into. So that is the area where you can sell a call or sell a put and be assured in the last few days that the market will either come back, so you'll make money either way, even if you're short, even if you're long, so you can close and you can make money. So SPY, that 382 level has been really beneficial for trading, both for short and both for long. Now, is that going to continue for long? Now look at the reaction for the market. What happened today? So yesterday, we had to look at perspective from yesterday. That was in the first day of the year, January 3rd, for the market. When it opened, it tried to rally and then got sold off, and then the market closed around 3800 yesterday. And so yesterday the Apple got hammered, Tesla got hammered, and that's the reason the stock market went down, although Meta kind of rallied. Google was doing well yesterday, so there was a mixed reaction. A lot of these stocks which were actually did not do well, like Intel, one of them, last year, it did well yesterday. And the ones that was actually which did very well last year, like UNH, the United Healthcare, that got beaten up. And Apple, which made a new 52-week low yesterday, which is closed around 124. And then again, it was bought back today, this morning. And Tesla obviously went to 104. So I sold put at Tesla yesterday. I sold put at Apple yesterday. And I obviously closed both of them before the close yesterday, and Tesla today. But what happened today, this morning? It was risk on. So as we move into today, the market opened really high. It went Tesla was hovering around 109, straight from 104, and then we had also Apple went to all the way to 130, and then it actually closed down below 125. I think it was actually in the end the market closed. It closed around 127 level. So yesterday it was a sell-off. Today it was a buy. So yesterday it was sell-off despite bond, the TLT, the LQD, the HYGs. Those are the ones which are the HYG is the high yield corporate bond. LQD is the US bond kind of conglomerate ETF, and as well as the TLT is a 20-year US bond. So those were getting bought. So the bond yield was down. So that was good for tech stocks yesterday. But the market was generally kind of not kind of streaming by yesterday. It was really moderate, but Apple and Tesla was getting sold off. Today the bond again got bought, so there was a little bit of a follow of rally on the bond, so which was good for the stock, the long end stock. So today there was risk on trade. So CRM got really bought well. Today it was like, yesterday it was an upgrade, so it went to 130 to 133. Today it was a follow-up trade, 133 to all the way to 138. The other one which was really doing well is China. The China trades, all of them are fantastic right now. The question is whether it will follow on. Like, last time back in around September, the Baba around August, I think around August, end of August. So Baba and the K-Wave overall, the China internet stock, they were really doing well, and they went all the way to 103, 102. The Baba and the JD.com was around close to 70. The Baidu was close to 150 and so on. And then we had this, the October the election, and right after that there was a sell off, and that sell off took Baba down to 60. And even before October, around end of August, right after that rally which took Baba to 101, 102, it sold off. It got all the way back to 90, and everything else as well. As the China, like this, the U.S. China tension with the Nvidia news and all that stuff, the U.S. Prohibiting selling chips to China, so everything was getting sold off. Now we are at that level again, 104. The question to me is whether this rally on China is going to continue, or we're going to see a trade. So, it's going to get sold off again. I think that it is because it's a new year, the new money coming in. It might be the case that, the China New Year is next year. China already has reopened. It might continue. It might be, like it has some legs. But the question is that, so many times there's a paper cut. You are piling onto the China trade, and you see that some news came up, and you see that, the China the stocks getting sold off. Now, from the Chinese side, because the election is over from their end, they are reopening. Then the Xi Jinping will try to do some. They'll try to. He is willing to lose some small wars, small battles, in order to win the long-term war. So I think it's going to be good for the China stock from the Chinese perspective. But on the other hand, the US, I don't know, they'll be so cooperative. So there might be, things like TikTok or ban and other stuffs like, here and there might be coming. That might be bad for the Chinese stock. It seems to me that it is it's a low risk upside, but there are risks on the Chinese stock as well. And it's not going to be like, streaming up, because, there are always risks on the China, Taiwan. So the Baba will be probably at a 120 level. That's the upside from here. 104 to 130 is still probably a good trade. But I don't know that if people are going to go still, like use it as a trade, that it's already they made their money and they're going to sell off from the previous high level, which was 104. Right now, Baba is selling at 103, 104. So that's one. Then you have this, SPY moving around this 3,800 to 3,900 level. It has been a really good trading window if you buy and sell in this trend. But this does not stay long. I mean, otherwise everybody in the world will make money if the, like the SPY would be trading in the range, $100 range, or the 100 points range all the time. So what is the next move then? I think this is what is going to happen. The Friday, the JOLT number was good today. That was actually one of the reasons why the stock actually rallied today. That basically told everybody, hey, the economy is still strong, so recession is probably not coming soon. But then again, what happened? Middle of the day, Neil Kashkari, he tweeted that, hey, we are actually going to raise the interest rate, to 5.3 level. Market did not pay that much attention. They said, okay, you know what, this guy is like, outlier. He was too much dovish in the before. Now he's too hawkish. Don't pay attention to him. But then again, at 11 o'clock, the Fed minute came in. The Fed minute for the last December 14 meeting, where they said that we are not going to cut rate in 2023 at all. And remember, in December, before that meeting, right after, before that, there was a CPI report, and the market shot up all the way to 4,000, close to 4,100 on December 13. So on that day, the Fed meeting, the Fed would like to curb the market down. So they would have to be sound hawkish. So they, in their minutes, it's no surprise, they would say that we're not going to cut, so that they want the market to go down based on like their rear ticks. However, it's 1 month down the line, and market actually did not go up above the 200 moving average. Every time market touches the 200 moving average, like it happened in in the Montana when they actually um, the Jackson Hill, when Jackson Hole, where on September, I think it was September 19th or 20th, when Jay Powell came in, right when the market was actually touching the 200 moving average around 4,200, and it was almost basically testing and going above that. So that was basically would be marking the end of the bear market. So at that time, he gave a very strong hawkish pitch, and that took the market down around September 21, 22nd. Then we had this issue with the UK, and then this October CPI came in right after that on October 13, which was a surprise, took the market down to 3589. So all the sequence of events happened right after that when this market was touching the 200 moving average, and Jay Powell talked it down, right? And then again in December, market was trying to go touch the 200-day moving average to 4100 level, and then this Powell actually was really hawkish. That took the market down again, killed the Santa Claus rally. And then there was this job number and all that stuff came. It was not a surprise, and then the market did not follow up with that once it's actually broke that the momentum, upward momentum. So now again so every time that happens, so there's the Fed watches the market. It sees that if it's going to go up, and then they will talk it down. Now Neil Kashkari, at the time that happened, and so that reflected in the meetings minutes that Jay Powell said that they're going to be and the whole Fed committee said that they're not going to cut rates. That was back then, but since then the market went down from 4100 all the way back to 3750. Tested 3750, did not go down further, and again 3800. Right now we are in this juncture of earning, very important earning, Q4 earning for 2022, and what is going to set the precedence how the market is going to go for the next few months. The consensus in the market is that we are going to see after the Q4 earning, everything is going to go down, right? S&P is going to test this 35.90, that October 13 low, and then we might go down further to 3200 by the end of the Q1 earning, which is coming in April. And then after that we might see some Fed pause because the earning will be so bad. So by the time of the May, the current Fed fund showing that the dissidents, that lot of people are saying, the economists are saying that Fed will continue to hike until April, and then May they're going to pause, right? So that means a 25 basis point hike in February, March, and April. So 75 basis point more. That is going to take them to close to 5% interest rate, and that is what they're going to stop. Where Neil Kashkari said that they're going to go at 535. So there is this dissidence, right? So the question is that at April Q1, whether the earning comes out real bad, and there are a lot of job cuts, and that's going to cause a recession, or basically there is a negative GDP growth. That is going to be very clear from the April earning, and in the May meeting, Fed is going to say it's pause. So by the time S&P is 3200, and that is going to cause the rally back, and that is going to be followed up because Fed has paused. So now there's a visibility where the like at the stock market, the tech stocks are bottom at the time. So Amazon around $70. Apple is probably sub 100. Tesla is probably 70, 80. And the CRM and others are below 100. All that stuff, so all the good stuff. So everybody goes and pile on buying. So the risk off, and market picks up from there, goes all the way up to 4200, 4300 by the end of the year. So that's a huge rally. That's the consensus at this point, right? The question is that is that going to realize, or something else is going to happen? Now, it's hard to say at this point what is going to happen. I went to Disneyland, like 2 weeks last week, and I saw it was full, right? There was a huge line. It was raining crazy, and people were pouring in. Now, obviously, you have to buy these tickets way early, and on the other hand, there are, so that tells me that a recession is not here yet. On the other hand, I went to a hotel in San Diego, which was like, it was pretty expensive hotel, and it was like, the receptionist says there's no room empty. So that's one another thing that you can say, that I don't see that the recession is right here, right? Then otherwise people are not going to be traveling. Then the second part of it is that there is a really the forecast from the consumer electronics, from the cloud, the customers, all the stuff is like cautious, right? It's not negative, but it's cautious. So there is this juncture right now that people still have money in their pocket, but people are cautious. When that happens, then and the biggest consumer, in the market, the U.S. market, the house price, the house mortgage rates, right? Right now, even there's a lot of people are looking for house, but the supply demand is still tilted towards the seller, because there's not much house available, but it's apparently is getting there to the 2019 level. However, one of the key area is that everybody who already has house, they have refinanced. Most of them refinanced, and they're paying around 2.5-3% interest rate. So their monthly payment is not that high. People who bought house in 2020, maybe it's a little bit higher, but even if you look at the overall balance, unless people have taken a HELOC loan and all that, it's not terrible. So people, even if they lose job, right? So they have other ways to do income, do like Uber, or they're not going to go like foreclosure. It's the consensus that it's going to be okay. The consumer balance sheet is okay. So if that's the case, so what do you think is going to happen, even if even if there's a recession? So if you see that people are not stop going to the grocery store and all that stuff, so I would assume that that it's going to be a mild recession. So in that respect, Q4 earning is going to be okay. Right now, if you just go past, don't think about Q1, just the Q4, I think is going to be okay. And if that is okay, what do you think is going to happen? The earning came out okay, the guidance is bad, or no visibility, but market already knows that. So market will say, okay, we think that the Fed is not going to raise interest rate anymore. It's going to be near 5%, and market is still holding up fine. Maybe we don't have a recession. Maybe the GDP is going to continue. The job number is not going down. Market is going to rally back to 200-day moving average between January end to around March. Then around March, we have a problem. Now we have the April earning coming. Remember what people said in January? That we don't have visibility. We might have, bad stuffs coming. People will say, 4,200, we rallied too much, sell. And the sell is going to happen. We're going to again come back around March end, resting around 3,800, 3,750, okay? Waiting for the April earning. Depending on how the April earning shows up. Now, it can be both ways. I think it's more of a sentiment rather than the economics. And it seems that Fed is not going to pause if it's 4,200 economy, and if this don't see the job numbers go down quite a bit. So what is going to happen in that case? The 5% interest rate, and in between there is inflation. I know whatever is going to happen in the Ukraine, which might take a twist, right? And inflation might come back, because if you look at 1970s chart, which I look for more frequently these days, inflation went down and came back again in 75 and came, so it was like 3 or 4 times the inflation went up and down between 1974 and 1980. So, and in between, the the 10-year, and uh, the 10-year as well as the dollar. The dollar in the beginning until 1974, 76 to 76, it was above the 200 moving average. But since 1977, the dollar was below the 200 moving average. Gold was up and oil was up. And right now, if you look at the, like oil has actually started to going up because it already bottomed. Gold has started, gold is in the bull run since 2020. Dollar is above the 200 moving average, but it's in the downtrend. If it goes below 200 moving average dollar, then you can be certain that, gold is going up. So inflation and the oil kind of keeps going up. If China demands comes back, inflation is going to go up. And if that happens, around this April-May timeframe, let's say that China opens in February after the New Year fully, Chinese New Year. And then, we see the Chinese demand kind of goes up and Chinese GDP increases. And by the time 2-3 months, give 2-3 months, and by the time of the April-May, you see the oil demand goes higher and with the oil price goes up. What do you think is going to happen? By the time of the, next August or September, we're going to see the food price goes up again. We're going to see everything, transport cost and everything goes up again because oil price is up again. Right now, crude oil is at 74. If it goes back to 95, we have trouble. If that happens, what do you think is going to happen when the job number is constant? Fed is going to say, okay, with terminal rate is not going to be 5%. We're going to keep higher for longer. So we're going to go for 6%. And what is going to happen to the stock market? Stock market is going to panic hard. And even if it did not test the 3,200 or 3,500, in April, it's going to go test 3,000 in October earning. And then it's going to hover between 3,000 and, this 3,700 for a very long time. I think, 4,000 will become a very strong resistance, for the 2024. So that's my theory. So I would not buy stock. I would not buy anything. I'll put cash. I'm going to sell call when I can. And, sell put if the, only for the week. And even in that case, it's high risk because you don't know which news is going to take the stock down. So sell put is difficult. It was good for 2023. You could still make some money 2022. But in 2023, I would consistently still sell call. And you could also do sell cover calls. So sell cover calls with the higher, buy strike price and lower sell strike price. And that would be the policy for the going forward. For me, I did that today with the SPY, but I haven't still done that for the individual stock. I think there is upside between now and January end for finance stocks, except JP Morgan, which is kind of 136. I think it's reached its peak. 130, 140 is probably as high as goes. Bank of America, I don't follow that much. Citi 50. Then Goldman Sachs 380. Right now it's 340. I think is the best opportunity is Goldman Sachs. On the tech stocks, Microsoft today got sold off. I think it's going to continue. Although I sold a put at 322 expiring this week, 222. I think it's going to go test 214 by this Friday. So I'm going to get assigned some Microsoft stock and I have to sell call against it. Tesla is probably going to be testing 115 tomorrow. I don't think it's going to go any higher. 115 is now its resistance and is going to probably go down below 100 pretty soon if it tests 104 again in the next couple of weeks. Apple does not look good. Apple, I think, is definitely testing 115 first, but it is going to be not straight down to 100. It is going to be some work before Apple goes down to 100. But before that, if the earning is good, then it's going to go to 140 first. And right now, I think it's 120 is a good support. And, it's going to be hovering between 120, 140, and between the earning and now. And then it's going to test later on at, below that 115 level. Meta is looking really fantastic. I sold Meta for tax harvesting, although I knew that it's going to happen, that Meta is going to be going up. But I had to sell a lot of stocks, on December 30th to to cover my tax issues. So I sold Amazon, I sold Meta in loss in order to avoid some really bad tax bill. So year end positive last year, not by quite, but positive. And the main thing that worked last year, selling put. This year, I wouldn't do the mistake that I did last year by selling put. But mostly some of them aggressive ones. But this year, I think selling call has some risks, so that's why covered call is better. But still, selling call is better than selling put because it's not about the earning, but it's more about it's going to go up at some point. The earnings going to be okay. The individual stock's going to be okay from the valuation perspective. But the problems are different. Problem is inflation is going to be there this year coming back, and technical 4200 is still a strong technical resistance. And the third thing, so that's where it's going to get sold off. And the third thing is that apart from the China opening, you will see that the Fed is going to, as inflation comes back, we're going to go see that the Fed is going to raise further, and is not going to pause, and that is going to take the market by surprise. And as we see bad guidance, and the earning is not growing, rather slightly regress, and there is no guidance or bad guidance, we're going to see that sentiment is going to continue like this for the whole year. So selling call is going to be beneficial, but do way out of the money call. I hope the VIX goes up further, because right now the VIX is still very low to make any sort of profit. So next couple of weeks, I think Nvidia is written on the sand that 170 is a strong resistance now. It's not going to go above that. Qualcomm is really good. Qualcomm is 108. I would sell a put on Qualcomm around 100 for the next 1 month until the earning. And after the earning, it is probably going to test 90 and below. So then I'm going to start selling calls after the earning to 120, because 120 has become the resistance point for Qualcomm. The healthcare, the bio stocks were good last year. Right now, it doesn't look good. The strength is actually getting tested in the first 2 days of the trading. So I'll be looking for those are still good bets. The Amgen and the Biogen and the Moderna and the Pfizer's. But because they had a good year last year, I think this year it might be difficult until they prove the earning is really good. So right now you can either put 10% below, 5% below the current value, or 5% above the current value. You can sell calls. I think they'll be safe until the earning comes out. And then the discretionary stocks so far, because the job market is good. So Lululemon and the Nike are doing well this year. So I'm going to probably sell put. I already sold put for the Lulu 300 next week. I think it's going to hold there. And if it falls back, I'm going to keep selling put. But I think Lulu has a good level at 270. It's not going to go below 270. 270, at least for the next earning, which is in March. So that is going to be a good level for me, selling put. Lulu is going to be, difficult to sell call against, because the high level is 380. I'm not 370, 380. And it can go there if the December earning is really good. The other ones that I would be observing is the stocks in the chip area. So Nvidia, AMD, and Qualcomm. And these are the main bets. On the retail side, apart from the Home Depot is actually between 300 and 330. This is the range. I think it's going to hover over the next couple of quarters. And 300 is a good sell put option, and 330 is a good sell call option. And SPY is your best bet. Keep selling SPY calls at 3900, and keep selling puts at 3750. So that's going to be the bet for the next few weeks. This was a long video. I'm going to continue to give more updates, and Happy New Year.